All right, welcome everybody. Good morning, good afternoon, wherever you're coming from. Sam here, Sam Seiden. Some of you are probably new to the session, so we'll go over some of the basics in a bit. But today's topic is, we're going to go over the difference between spot Forex and Forex futures. I wanted to find a trade that we could take together during the session. Unfortunately, the euro turned at one of our supply levels, before the session started. I don't know if anybody took this. How you doing, Boyke? And but we may get something in the pound. I'll go over to the pound in just a few minutes. So before we get started, though, maybe everybody could type where they're coming from right now, just so everybody can kind of get an idea and see if there's anybody in their area. So where are you at right now in the world? And I'll tell you, I'm coming to you from Chicago in the U.S. All right, welcome everybody. Pretty cold here. Great. So, you could stroll through the list here and see if there's anybody else in your area. It's always good to connect with people that are, doing the same thing you're doing. So we're pretty well represented here around the world. Good stuff. All right. So let's begin. And I want to, before we dive into, real international audience, good stuff. So I want to click over to the British pound real quick. I want to see if there's a trade that we can hop into together. Give me just a second here. I'll go over to the British pound and then I'll come right back. So the British pound here just dropped into one of these demand levels. Not a great area, but I would expect it to bounce a little bit higher out of this level. Now notice I'm showing you a 5-minute chart here of the British pound. I just showed you a 5-minute chart of the euro. And the reason why I'm comfortable going over smaller time frame opportunities in the Forex market is because I'm showing you today is futures charts. These are not spot Forex charts. So BP is obviously British pound, but these are the British pound futures, not the spot British pound. Okay. Let me go back to the euro and then we'll kick things off here. And there we go. Now I do plenty of short-term trading in the Forex market. In fact, I've done probably more trades in the Forex market than anything else in my life. But almost all of it, especially short-term day trading, is always for me done in the futures, the Forex futures. And there's a reason for that. Yeah, 1FX, absolutely. I always check the dollar. Okay. Now the euro has also come into this little tiny demand level here. Take a look. Nothing great, and there's supply above, pretty close. We would expect this thing to bounce a little bit higher. And, you may be thinking, well, these are little tiny moves. Who cares about these moves? Okay, just like from this one. But from here to here is about 30 ticks, right? I'm sorry. Not 30 ticks. But you could see, let's see the range right here. So, on 33. Yeah, so a little bit more than that in here. And a little bit more than 30 here. So in the currency futures, the Forex futures, you're making or losing $12.50 a tick. And that's just for doing one. So, it doesn't take much margin to do one. You could do as many as you want, but you could see the profits can add up pretty quick. Now, the reason why I would always do this in the Forex futures and not do it in the spot Forex is because they're very different markets. Okay. Now, when I say that, these are actually the same markets. I mean, the euro is the euro, but the mechanics behind the scenes of how the orders work and who's doing what and how your order is processed and who you're trading against, that's all different. So the reason why I wanted to bring this topic up today is because I think there's such a big advantage to day trading the currency, the Forex futures versus day trading spot Forex And I just think it's important that we spend at least one session going over it. Okay, so let me take you, Harley, we're going to talk about that in just a minute. So let me take you over here for, let me bring something else up and we'll go over. In a few minutes, but take a look at the screen. Okay, we're just going to go over some differences between spot Forex and Forex futures. Now the spot market has gotten a lot better. You know, it used to be, used to almost be able to say that the spot Forex market is not regulated at all. Today, you can't really say that anymore. There is regulation. It's you know, it's still the least regulated market on the planet. But so take a look. So on the left, there's really still, you know, there's no central exchange for spot Forex. In the Forex futures, you do have a central exchange. Okay, it's the CME. So you're trading in the Globex system, which we'll talk about in just a minute. Yeah, Harley, you definitely get better you know, better margins with spot Forex. So more buying power, more leverage, but that's not always a good thing. You know, you get plenty of leverage in the Forex futures. I'll show you that in just a minute. So you know, the spot Forex market is far less regulated than the current Forex futures. Okay, there's also transparent volume when you're trading Forex futures. Okay, plenty of volume here, and you can see it all. Definitely more regulated in the Forex futures, and your trades are matched on the Globex system. So if you're trading the S&P or anything else through the Globex system, if you're trading currencies like the euro or the yen or any of them, you're trading those the same way. Those are all also traded through the Globex system. In fact, you know, when you're trading, say, the euro, any of the currency futures, you're trading them the exact same way, I mean, through the exact same vehicle that the S&P is traded, right? Now, the only downside to Forex futures is that you're pretty much stuck to trading with the majors, okay? Because while you'll see in a moment, I'm going to take you and show you exactly where to find all this information, while you'll see that you can also trade the cross pairs, things that are not related to the dollar, you probably wouldn't right now because the volume's not enough. Okay, and I'll take a look back at the questions in just a bit and try to get to as many as we can. I want to make sure you get this information because it's so key. I mean, and the other reason why I'm so kind of passionate about this topic is because I see so many people around the world trying to make a living short-term trading the Forex market and just not being able to do it, right? And a lot of people are good at their levels, you know, supply and demand levels and all that, but, you know, it just doesn't work out for them. And a lot of that is because they're trying to do it on like 1 and 2 minute charts or 5 minute charts on the spot Forex. That's going to be very difficult to do no matter how good your levels are. Okay, where it's going to be much easier to do in the currency futures, it's Forex futures. All right. So the another big one here, again, on the spot side, I don't need to tell most of you this because most of you know this, but most of the brokers are market makers. So that means a lot of them are going to be on the other side of your trades, which, you know, not good. All right, let me take you to a website now and I'm going to walk you through exactly how to find this. You can go through all this stuff yourself. Give me just a second here, and then we'll get back to the charts. So remember this website. This is cmegroup.com. Again, cmegroup.com. You should be able to see it on your screen now. We're looking at the home page. Okay. Can everybody see that all right? Cool. Yeah, and I see looks like we have some XLT members in here helping answer some questions. That's great. Thanks for that. Okay. Yeah, so take a look. So when you're on this website, you see this FX on top. I'm going to click on FX, and then I'll share the screen again for you. And whoops. So when I get to FX, I'm going to click on One second here. Yeah, you want to go to contract specifications, which of course, let me get that tab just a second. Sorry about that. So when you get to contract specifications, I'm going to go to the Euro US dollar. And let me scroll down here. Okay, so when you get to this page, here's where you see contract specifications. That's where you want to go. Now let's walk through this information here. And I think you'll really understand this. Okay. These are great markets. There's nothing wrong, I'm sure you hear this, there's nothing wrong with trading the spot market. All I'm saying is if you're trying to make a living at this, doing it as a short-term trader, my opinion is you're going to have a much easier time doing it in the futures than you will in the spot market. And that's because of how the markets are designed. Okay? So take a look at this page. We're looking at the specs for the euro against the dollar. So you can see contract size is 125,000 euros. And you'll see that I'll show you the margin requirement for this in a minute. It's tiny compared to this 125,000. So you get plenty of leverage there. Settlement procedure, you see physical delivery. What that means is, now the other thing with the futures is, these are contracts that expire. These are nothing like options. So don't think they're anything like options. They're nothing like options. All they share is an expiration date. But it's not like they lose value as you approach expiration like most options do. Okay? So once a quarter, okay, they expire. So that means if you're in a trade, and you want to stay in it, you just roll it over to the next contract expiration month. Okay? But as a day trader, that's not, that's not a big deal. Okay? Not a big deal. Okay. So, take a look. Physical delivery means when the contract, when expiration date comes, this is not settled in cash like the S&P is. Okay. Yeah, you should be able to create a demo account with most brokers, Ali. Okay. So this is not settled in cash like the S&P futures are. This is settled in physical delivery, which really doesn't affect us. I mean, I don't think anybody in our group here, we're all speculators, right? We're all traders. So we're not interested in actually taking delivery of 125,000 euros. Okay? So you're going to have a margin account when you do this. The ticker symbol here, the electronic, the Globex, is 6E. Okay, so this is the symbol 6E that you're going to see on most platforms. Minimum price increment. So take a look here. This is very important. It's probably the most important thing here. When you see on the chart, you'll see the decimal point, 0.0001. Okay, that's the smallest move this market can make. That would be called a tick, or in spot forex a pip. Right. So each 0.0001 move is worth $12.50. Okay, so let me take you back to the chart for a moment. So you can see now, so from like 1.3301 to 1.3299, 1.3298, those are all little ticks. You see how it's moving right here? 1.3261 now, 6261. That little one tick is worth $12.50, right? So if you're trading like 5 of these, it doesn't take much of a move to make quite a bit of money or lose quite a bit of money, right? So the play here this morning was just short against this supply level with a little target right here. Again, like we said, I mean, there's some demand here, but nothing we buy against because there's new supply at 132.80. So, but the whole point is, I mean, what I like to do in the mornings is look for these setups, and I can't think of a morning where these don't show up, right? So just shorting against this supply for a move down to this demand or close to this demand. Okay, each little tick. So there's about 35 ticks in here times $12.50 for doing one. Okay. Yeah. So Harley, are you saying the spot versus the futures are off? Is that what you mean by that? Yeah, I agree. Um, and these markets are very liquid compared to the spot market. Let me just read back a little bit here. Yeah, a trader, that is what I'm saying. Okay. Yeah, I think you'll have a harder time. One more question here I'll get to here. I see your question about, there's a longer question up there. I'd say your name, but I'm gonna mess it up. So, you're asking, what do you do when price comes up to your level? It stops just before it and then bases, almost forming like a flag type thing. Yeah, a lot of the time, that's not a good sign, right? Because if you pick a level where supply and demand is really out of balance, in a big way, which is good, price is not going to spend a lot of time up there. Okay. Mick, it is, but you have to send me an email. They do make some exceptions on that. Okay. So let's go back here just for a moment. I want to show you one more thing, and here is the website again. A couple more things on here. So not every Forex futures market is $12.50 a tick. Okay. The euro is, the yen, the Swiss, but like the Canadian and Aussie are $10 a tick, and the pound, a British pound, trades in like half tick, so it's $6.25 a tick. Now we're expecting you to remember all this, but at least you could get an idea and then see where this stuff is at on the website. Okay, so take a look. And trading hours, now it says 7:20 a.m. to 2 p.m. That's Central Time, that's Chicago time, but this thing only closes for 15 minutes and then it opens again. It trades all night long. Okay? Yeah, Vivi, I would agree with that. I would just be careful. It's fine to start with a really small account trading, mini lots in the spot market. But make sure you're not trying to, you're not doing it to try to make a living. Make sure you're doing it more to learn and to get good at this. And then I think once you start putting bigger money to this, you're going to find that probably better to do it in the futures. 1FX, yeah, it was. Not the best level, but yeah, it was. Okay, so I want to show you one more thing here, and then we'll move on. We'll just go back to the charts. Where is it here? Here we go. So look all the way at the top where it says margins, performance bonds and margins. I'm going to click there and take you to the euro. Whoops. Okay, so let me do that here. I'll show it to you. Now they're working on customizing this page. They haven't done it yet, so I just need to scroll for a second and find it. Okay, here we go. All right, so let me pull up the euro again. Okay, here it is. I'll highlight it for you. Okay, so here is the euro. All right, so in the euro here, I'll click off this again. Yeah, Harley, you're absolutely correct. It was like this a year ago. But, what are you going to do? So take a look at the euro future, EC. So initial margin of $5,400. That's not bad. Okay. Now that's going to be, now intraday, most brokers are going to bring that way down. You know, like if we were to look at the S&P margin on an S&P contract, it'll look quite high, but the reality is trading it intraday, brokers bring it down to like $500 intraday margin. Okay? Oh yeah, Harley, absolutely. You can get it much cheaper. Okay, so but still, you know, the leverage here with these is fantastic. Okay, so I want to take you back to the live markets. I think we'll just stick to live markets for right now, and let me do that. Give me just a second here. I'll bring these up. Okay, so we'll hopefully find some more trades to take. I was looking for something to take together, but that euro hit before the session started. So let's go over and get another chart. Let's go back to the one that we were looking at before was the British pound. So there it is. So you can see buying prices bouncing a little bit from this demand level here. If it was into this lower area, I'd probably push the buy button here. That way you can kind of see this all play out. You can see how the numbers work. This is 625 a tick. If it comes back down into here, maybe I'll do it. Not a great level, but just so you can see how this stuff works. Okay. Yeah, so now we're looking at the British pound. So this one pays $6.25 a tick. Okay. Forex and Forex futures. Yeah, stay away from MF Global. I don't even think you can open an account there anymore. Yeah, not funny though. I'm sure there might be some people here that had a MF Global account. All right, so and now how do you make money from all this? You know, that's I think what everybody cares about. That's the most important thing, and that's pretty much all I talk about here. It's, you know, just a direct link between, strategy and putting money into your pocket. And that all comes down to identifying where the real willing buyers and real willing sellers are in a market. And when I say that, I'm not talking about the conventional term support and resistance. I'm talking about identifying where real willing demand exceeds willing supply, which is where prices stop falling and turn higher, and where real willing supply exceeds real willing demand. That's where prices stop rallying and turn lower. Now, the benefit that I had, not that I'm smarter than anybody else, because I'm not, but I had a big advantage because I started on the floor of the Chicago Mercantile Exchange. So I got to see all the orders, in front of me for, every single day. So it's you spend a little time, you clearly see what that picture of real willing demand and supply looks like on a chart. So that's what I'm trying to show you here with these levels. Okay. Let me just do this here. Now, again, I'm not, this is not a trade I would normally take. Okay. So I would not expect this one to work out. So don't take this trade. I'm just going to show you so you can see how the numbers work. Let's put this thing, let me just grab it right here. Okay, and then let's view status bar. So you can see down at the bottom. So I just bought one of these in the futures. Again, do not take this because I don't think this is going to work out. Okay, those of you that have been with us for a while, you know this is not a quality demand level. But I want you to see the numbers on the bottom. So you can see right now down 625. Right, you can see at the bottom. You can see how these things work. I tied up just a tiny amount of margin. So now I'm down 2 ticks, down $12.50. So if you get to the bottom, you can see how it's working. In a given morning, usually I'm trading the euro, occasionally the yen. All right, but this thing's hardly moving else. So there's not a whole lot to see. So we just bought one British pound future at 154.84, and it's trading now it's trading 154.84. So now you can see we're even down here. Okay, it's because price. The reason why I'm saying this is not a great level is because I want to, normally we want to see a much bigger rally out of this level. You do have this level on top of level concept, but we want to see a much stronger rally out of this level. First of all, that's one thing. Second of all, look at this, this little wick to the downside I'm pointing to here. We don't want to see that in our best demand levels. Okay? So I'm just going to get out of this thing here. I just wanted to show you how the numbers work, but this thing isn't moving, and if we were to just sit here and watch it, we'd probably be Okay. All right, so let me get rid of that right there. Okay. Okay, so get out of that. So you get the idea, right? No, I didn't put a stop, and I just got in and got out. I was just sitting here watching it. Not a big deal. This might work out, but it's not a trade I would normally take. But I just think it's, I don't know, for me, I mean, the easiest time I have at this is that 7 to 9 o'clock in the morning Central Time in Chicago, way before the stock market opens, watching the euro, the yen, the pound, the S&P, those markets. There's always these little 5-minute setups to take. All right? So it's another reason why I got out of this thing pretty quick. It's not working out like we thought. No, I just didn't put a stop in because I was sitting here pushing the buttons. Yeah, I always have a stop. No, yeah, don't think I don't do that. Okay, so let's go to the euro. Let's go back to the euro. All right. So here's the trade planned out earlier, and now there's another little supply level above. Okay, so again, you don't need all this move. I mean, making 2 to 1 here on 5 contracts. I'm just saying. Yeah. A lot of time, Ali, I'm using limit orders. Okay, putting the entire order in. Okay, but I can tell you, just taking 2 to 1 off this level with 5 contracts and doing something like that, 3-4 days a week, you're now making more money than most people in the United States make in a year. And I'm not trying to say this is easy. I'm just trying to say, it really bothers me that I see so many people struggling trying to do this short-term trading in the spot market. That really bothers me, and it doesn't have to be that way. Okay. So anyway, that's now we could spend some time, setting up another trade or two. But for people that are new to the session, what we haven't done is really go into the whole supply-demand 101 concept today. And the reason why I didn't do that is because I do that most of the time. But there are plenty of recordings on the Online Trading Academy website and on the FX Street website. So, go back and watch those if you want to learn more of the basics, because we don't have time to go over that today. But let's go set up some trades, okay? All right. Hey, Manish, yeah, we'll see you next week. I will be in India. I've never been to India before, but we'll see you next week. Looking forward to it. Okay. All right, yeah. So let's find another trade here. Okay. And let's look a little bit bigger picture. So we always want to start with the larger time frame, and that's going to guide. For example, we're coming into a weekend, right? So what I'm going to do is I'm going to say, okay, going into next week, where is this euro likely to go? So as a short-term trader, should I be a buyer, a seller? Who has the odds, the buyers or the sellers next week? All right, so can everybody clearly see the daily chart of the euro here? Okay. So here's what we're going to do. We're going to start with current price. All right, so we're going to start with current price. We're going to look left and down and left and up without cutting through candles. We don't cut through candles. It's something, we do very different in Online Trading Academy to find our fresh supply and demand. And so let me do this. So I'm going to draw on first let me put in the supply level above. And again, what I'm doing right here is really setting up what I'm going to do, my action next week. And I believe we have another FX Street session where we can, again, take some trades together and do this together. So there's our fresh supply level above. And from, once we're done with this, we'll find some short-term stuff. Okay. So there's supply above. Now when I look left and down, we've got a pivot here, but I'm not that excited about a pivot because, again, a pivot is just typically a pullback into an area already. This is all right. But if I look left and down from here, there's really nothing. We've just got three big pivots here. Okay. So what I want to do is go down to a smaller time frame and investigate this area here. Let me do that real quickly. I'll just scrunch up a 60-minute chart. So you can see we're down into this stuff right here. Okay. And with a wick to the downside, and some new supply levels above, I am not all that worried about that. So I'm going to go back to the daily. Okay. And I'm going to go back here, and I'm going to go down again to another smaller time frame. And I want to see, let me see that on, I believe you have a nice, yes, I do, right here. So I'm going to scrunch this up. Give me just a second. All right, so here we have a level at 130.80. So I'm going to put that in. So I would expect, it's 130.80 is okay, but below that we have some unbelievable levels, but we're not anywhere near those. So I'm going to put them in, but I'm not going to talk about them too much because we're going to, I'm sure we'll have another FX Street session before we get there. So let me put in this level. So that's it's about 130.85. Okay. So 130.85 on the downside, and then on the daily here, we've got this one at 134.80. Okay, so right now we're kind of in between those two, but if we, so I would expect prices, if prices rally up to the supply above, I'd be looking to short. If prices drop down to the demand below, be looking to buy. But in between, now I know that I can take, 5-minute supply and demand levels constantly until we get close to one of those bigger picture levels. Does that make sense? Okay. Let's see. Yeah, I see that question about the fundamental difference. That's one of them. It's more of a real market instead of just market makers. You know what I mean? Okay. Yeah, that 132 is just a pivot low and into a level to the left already. Okay. Harley says, isn't the spot more liquid? The spot is not more liquid for us, for retail traders. Remember, it's because you're trading the market that the broker's making for you. If that makes sense. Okay. All right. Now, if you're trading through Curdex like a big institution does, yeah, then it's very liquid. But the retail trader doesn't have access to that market. Okay. All right. So let's take a look. So that's the euro. I can take a look at another market here, but I just think what I would do is spend a few mornings. I'm saying mornings in if you're that 7 to 9 Central Time, a.m. Spend a few of those right around there. It doesn't have to be that exact 2-hour increment, but spend time finding little levels on this 5-minute chart. You're going to see how powerful these are. All right. Mixed spread betting in the UK and Ireland is the exact same, computer program as what's used for most spot Forex brokers. Okay. Making that spread. Okay. So the spread that you see is not really most of the time not the real spread of the market. Right? Okay, that's the spread that's being made for you. Yeah, so Jason, there's a big difference between just a pivot and a valid level. Huge difference. I mean, that's a big conversation. But we'll get there. If not this session, but probably next session. All right, so let's take a look at some other markets here. I can look at any market if you want. Okay. Yeah, it is tax-free for profits. If you're making profits, you just don't see a lot of people making a lot of spread betting profits. So someone wanted to look at the gold market. Let's take a look at gold. We've looked at the euro. We've looked at the pound. And now let's look at gold. Now gold hit we've been, most sessions we've been looking at this gold market on the daily, had that big level at 1800. We've hit that, fallen quite a bit now. I would argue, everybody says, well, make sure you keep buying pullbacks in gold. I wouldn't suggest doing that. I think the demand level to buy gold at is well below 1600. I wouldn't be doing that in here just because that 1800 supply is so thick. We've been looking at that for a while. But gold you could do the same thing with. All right, but take a look at, there was a level here I wanted to point out to you in gold. Give me just a second here. Here's a level. Let me just put on this time frame right here. Now, don't just jump in and start trading gold futures, by the way. Be very careful. This is a big money market that moves very fast. Okay. I'm going to draw this supply level in. And I would expect gold to see some kind of rally here because you can see from the lower right chart, that weekly chart down there, we are right into some bigger picture demand. But again, I've been watching that 1800 supply and it held real nice. There was a quick move out of there. There's probably plenty of supply left. So a short-term supply level we might consider in gold is on this 30-minute chart right up here at right around 1707 to 1711. You can kind of see it up there. No, Rembrandt, see, the thing is, here's the thing, Rembrandt, that's a great question. The reason why I would say trading the spot Forex market is okay in the bigger time frames, like swing trading or longer-term position trading, is because, again, the broker can't take the market too far away from the real market, if that makes sense. Okay? Can't take it too far away from the real market. But when you come down to the smaller time frames, they have enough wiggle room to take you out of a trade. I mean, look, how many times in a spot Forex trade have you ever gotten stopped out, but you look at the chart and it doesn't look like the price even traded there? Have you ever seen that? You ever got stopped out in a spot Forex trade and you look at the chart and you don't even see it? It's like, wait a second, how did I get stopped out? Price didn't even get there. So look at how many people are typing yes. Have has anyone ever seen that happen in a futures market, a futures trade? No. Okay, you're not going to see it there. And again, I have no benefit. Believe me, it may sound like I'm trying to sell you on futures. Like I have no financial incentive to push you over to futures. Believe me. And I don't even get paid to do these FX Street sessions. I just do them. I just do them because I want to. But I'm just telling you, it's if you're short-term trading, that's where there's enough wiggle room there to knock the average person out of a trade, and which helps out the broker. And but in the big time frames, the size of stops and targets for a swing or position trade, they're too big. So trade spot Forex for the larger time frames, and look at the Forex futures if you're interested in doing some short-term Forex trading. I think you'll find it a little better. Yeah, those micro futures, be careful with those. Not liquid enough, I would say, agenda. Okay. Yeah, exactly, Ethan. All right, let's take a look at another market here. Now, the S&P just hit pretty much the same level that the euro did. I'll show you that in just a second. And again, I know this is a Forex session here, but you'll see the S&P really hit just about the same level that the euro did. I'm going to pull that up here in a second. I think you'll see that it was actually cleaner in the euro. Here's that. And that's the other beauty of trading, when you're trading the currency futures. When you're trading currency futures, if you could do this in the euro futures, well, a chart's a chart. That means you can also do it in the S&P and also do it in gold and also do it in the bonds and also trade corn and everything else. Make sense? All right. Boy, take a look at all this room in below. Really nothing in here to stop prices from falling. Take a look at this. This is a trade to take today. Right. Anybody take that one? That was a good one. Again, this supply level is the same supply level in the euro. So here in the S&P, you're making or losing $50 a point. Okay, $12.50 a tick. So this from 1170 down to say 1160. That's 10 points, right? At $50 a point. Okay. So not bad. And I circled this area because obviously there's really not much to stop price from falling in there. Make sense? Yeah, Globex is good. Nothing's perfect. And the other cautionary note, I wouldn't be responsible if I wouldn't mention this. And I'm not accusing or anything, but the one thing I think you just need to be aware of is that the CME is self-regulating. So the biggest derivatives exchange in the world is a self-regulated exchange. Not accusing anyone of anything. Just want to make you aware of that. All right. Anybody want to look at a different market? I could pull up another market or two here. We could certainly go back to the currencies. But I just wanted to kind of make you aware of the futures and the numbers behind the futures, where you can get more information on the futures. All right. Let's go back to Alstock. It's very interesting. It gets even more interesting if you spend a few minutes thinking about it. Anyway. Let's take a look at the Aussie. Okay, so pulled it up here. And again, just for today, we always look at the spot Forex. There's nothing wrong with that. Let's just try something different here. The more you can get educated about this stuff, the more you understand how the whole game is played, the better you're going to do, right? Just in a few minutes. So here we're looking at the Aussie through the futures, not through the stock, not through the spot, but through the futures. And if you look at the larger time frame, we've come down quite a bit, possibly nearing some larger time frame demand. But we do have some nice supply sitting just above as well. Okay, and I'm going to show you that here. It's a really nice level we've been looking at and monitoring. I'm going to draw it in for you. So we'll set up a kind of a swing trade here. If you look at the lower left, I'll blow this chart up. And here it is. Yeah, Rami, the charts are going to be pretty much the same between futures and Forex. It's just when you get down to the micro time frames, that's when you're going to see the differences. So here we're looking at a larger intraday time frame of the Aussie. Okay. And I would argue that your near-term supply is right here, and your near-term demand is going to be down in here. These don't look like, especially this demand level, isn't going to look like much to you, but that's why it is good, because there's very little trading there, and then price took off. If I go down to a smaller time frame, you'll see that that's really like a perfect looking level. Let me take another picture. The Aussie is a great market to trade. So this one is $10 a tick, so not $12.50 like the others. There you go. So we've got a level sitting just above. Here's a supply level. This is where we expect prices to stop rallying and turn lower. And typically, again, you can watch the recordings for details on the strategy, but We're selling short at the bottom black line with our protective buy stop just above the upper line and a target of just before the nearest demand level below. All right. So we'd be looking for, to short a rally into the supply for, you've got the opportunity for quite a bigger move to the downside. Now you may be looking at this and saying, well, why not choose this area over here? Because this was a level, price rallied away, and then it came back right here. You see that red candle? And then it took off. Great level, but it's already used up. It's not fresh anymore. Okay. Yeah, so Tiger, it's the breakout. Okay, it's the breakout that tells us what the real supply and demand equation is at that price level. Okay, so without a breakout to the upside or downside, how do we know whether demand exceeds supply or supply exceeds demand? We don't. But what most people are trained to do, especially trading Forex, they're taught to just buy breakouts and short breakdowns. Okay, and that's why you don't see people making money doing that. Let the breakout or breakdown happen. And that tells you where the real orders are, where the real willing buyers and sellers are. Then get in on the retracement. Make sense? Okay. You need to know where the buyers and sellers are first. Okay. So there's the Aussie. And let's go back, see where that Euro's moving to. 132.50 now. Yeah, Gary, always want to start with the larger time frame so we know where we are on the larger time frame supply-demand curve. Absolutely. Okay, let me just capture the chart again. So this euro, I started preparing for our session today about 45 minutes before it started. I saw this level. I was hoping this would hit during our session. It didn't. It hit before our session. So it took a little bit this morning, and but you can see how this stuff works. These opportunities are out here all the time. And again, I wanted to just at least open your eyes to the fact that you can trade. There's another way to trade the Forex market. And the odds where the odds are at least not stacked against you there, like sometimes they are in the spot Forex and with the spot Forex. Make sense? So I know we're kind of running out of time. We're coming up to the top of the hour here. But let me put my email address in here. I am very caught up on emails. If you have any questions, okay, you can send me an email. Also, one more thing. So there's my email address, Seiden@tradingacademy.com. And, the other thing is, we did not spend much time, any lesson time today on supply and demand. And we didn't, spend a lot of time looking for trades like we usually do. So you can go back and watch those recordings if you like. Hopefully they're helpful. All right. And we'll see you next week. And next week we'll just focus on, again, finding trades and setting up trades and making sure that you start to get this and understand it. All right. Have a great holiday weekend, everybody. Thanks for your time.